But I do wonder if you think we are headed for some kind of holiday capacity crunch.
Absolutely, yeah. The airlines won't be able to add the capacity required for the demand. And that's going to then result in higher airfares for everybody that's traveling. I think also there's going to be some conservatism as people add back capacity. So around the industry, we're adding in less capacity than we would like so that we can make sure we're delivering quality operation. And that's going to result also in higher fares.
Where do you think the breaking point is for fares at this point? What is the consumer willing to pay?
It depends on the time of day and why they're traveling. I mean, we're seeing certainly holiday fares back to above pre-pandemic levels. In contrast, if you want to travel midweek, particularly domestically, I think you can get a pretty good deal still because there's not a lot of business demand. Or said differently, a business demand has a long way to go to get back to those pre-pandemic levels. But if you're traveling on Thanksgiving, it's going to be a tight market out there.
I know Southwest and American have addressed the labor shortage. Air Canada this morning said they really haven't seen it to that degree. Are you somewhere in the middle?
Yeah, I think Canada's not nearly as tight a market as what we're seeing here. We're hiring across all our labor groups. We've hired 700 employees today, which is about a 50% increase over where we were at the bottom of the pandemic. And we're hitting our targets where we're seeing there's a little more turnover, particularly at the ramp. So people that work at the airport. I think it's a net positive. We're having to be better employers. We're rolling out some technology to make their schedules more flexible and manageable for them, and we're increasing pay. And I think that's what you're going to see across the economy, really, as we compete really for the same person. As Helene was talking about, everybody's out there hiring to try to peak up for the winter period.
Yeah, Jude, it's Morgan. I mean, one of your other businesses is private charters. We've heard certainly from the business jet makers in recent weeks in the midst of earnings that demand there has been pretty buoyant. What are you seeing? And does that continue to travel over into next year, even as maybe the pandemic woes begin to subside and more people in general feel comfortable getting on planes for business travel?
Sure. Yeah, so Morgan, we operate 3 segments. We have a cargo business, a charter business, and a sched service business. Our cargo business has been strong throughout the pandemic. In this fourth quarter, we'll do more cargo flying than we've ever done. Our charter business, as you point out, is coming back, and that's a lot of sports teams, particularly here in the fall. We do a big program for Major League Soccer and NCAA football programs all over the country, and those are coming back relative to where they were last year really strongly. We still have some casino charters that haven't fully recovered, but you know everything's flashing green right now across all 3 segments for us.
How about fuel? What's it like trying to hedge into this market right now?
But we don't hedge. We hedge differently. We would say that we have a variable capacity model. You think about the perfect airline, it's one that can fly a lot or a little and have the same unit costs. That's impossible, but we're getting close to it here, which means that when fuel goes up, then there's weak flights that get cut out of the schedule, and fuel goes down, we add them back. And that's the most efficient hedge an airline can do, in my opinion.